Thank you for joining us on the topic Learn How to Avoid Money Mistakes, how simple do's and don'ts make a big difference. What we do at Consolidated Credit is a debt management program, free budget and credit counseling, financial education, and housing counseling, which includes first-time homebuyer education, foreclosure prevention counseling, and reverse mortgage counseling. Everyone makes mistakes with their money. It happens, but it can lead to problems, and these problems may escalate if you don't do the right things to correct them. This webinar will provide information to help you avoid making these common money mistakes that could occur during your lifetime. The world of finances can be tricky, and if you don't act to correct these mistakes, you could be putting your financial future at risk. Has anyone heard the term, rich people stay rich by living like they're broke, and broke people stay broke by living like they're rich? Some feel as though they need to spend every last cent they have, and that is a huge mistake. There is this need to keep up with everyone else, but if your pockets can't afford it, then you shouldn't do it. According to Fidelity.com, the secret to achieving financial goals is by saving money, but that can't happen if you're spending every penny that you make. According to studies, Americans spend $1.30 for every dollar that they earn, so we're overspending already. Do you suffer from FOMO, fear of missing out? Are you trying to keep up with your friends or keep up with the Joneses? A few ways to know that you're living beyond your means. Are you carry high credit card balances or your cards are maxed out? Savings are less than 5% or none at all. You can't pay your bills on time. Sometimes people are truly forgetful. We're all human. If the intention is there, but the money isn't, then you have a problem. Another sign is your credit score is below 600. There could be other extenuating circumstances that can cause this, but if nothing happened in your life to seriously set you back, then that is a sign. And last is there's no money left at the end of the month. Now, don't think that just because you're on a salary, that's the end of your earning power. Consider getting entrepreneurial and creating a home-based business that can generate extra income. Do you bake the best bread or cookies on the block? Can you crochet a mean sweater or a blanket? Are you the scrapbooking king or queen? I'm sure you've heard some of the words that you should sell this. Well, go ahead and get started. Start with family and friends for business and then expand. Word of mouth is one of the best marketing tools out there. The source of most personal debt is spending more than you need to. Don't go shopping when you're bored, angry, or generally upset. You'll buy things you'll rarely use. And do not, under any circumstances, shop to make yourself feel better. You'll end up spending money that you don't have or could have put into a savings account or a rainy day fund. If you are prone to impulsive shopping, try to make a clear plan for what you need to buy and what you need to avoid. If you really want something, you can come back the next day. Always be patient when shopping. This is when we have to look into starting a budget and taking control of our money. There is what is known as the 50-15-5 rule, and this can be used as a starting point for a budget or a spending plan. This is where 50% of your take-home pay would be used for essential expenses, such as food, housing, utility, and other regular obligations, 15% for retirement savings, and 5% to short-term savings. Whatever is left over is yours to spend or save as you like. So some of us feel like we have too much month left at the end of our money. If so, then you're doing something wrong. Ask yourself, where is all of your money going? If it is all going to bills, then you have way too many to handle and live comfortably. If that's the case, then you need to get some help. It is imperative if you want to get out of the cycle. If all of your money is gone and it's not to rent or mortgage, transportation, and bills, then there's definitely a big problem. If you can't figure out where all of it went and what you spent it on, that means you need to sit down and work on a budget. So I've been talking about budget or a spending plan. Well, what is a spending plan? A spending plan can help you manage your money more effectively, live within your income limits, reduce your reliance on consumer credit, and save for the things you want. To get started, you need to calculate all of your income, then calculate all of your expenses. You'll either be what's known as the black or the red. If when you subtract your expenses from your income and you have money left over, then you're in the black. If your expenses are more than your income, then you're in the red. There are 3 different types of expenses that need to be calculated: fixed, flexible, and discretionary. Fixed expenses are the kind of expenses that you can't really control because they're necessary. Most adults usually have fixed expenses, like rent, car payments, mortgage, insurance, etc. These occur regularly and don't change from month to month. Flexible expenses are expenses that are needed as well. They occur regularly, but they are expenses that change on a month-to-month basis. They're necessary for day-to-day living, and you do have some control over the amount, and they would include things like utilities, gas, groceries, etc. Now, the last is discretionary expenses. This is the money that you choose to spend, like money for movies or having pizza with friends, or even the money that you save. So far, all of my expenses are discretionary, but I like to think of that as I'm young and I want to have fun. But there's going to be a time that I have to grow up and get my expenses under control. So if you want some tips for keeping to your budget or spending plan, try these suggestions to help you keep on track. When you're shopping, shop with your budget in mind. Keep a log every time you spend money. If you don't want to write it down every time you spend, there's an app for that. Watch for sales. Use coupons. Avoid buying impulse items like gum, magazines, snacks, unless you have budgeted for them. And keep a cushion of money for emergencies, or in case you overspend on your budget. Now I'm going to discuss a few of the reasons why personal budgets fail. And they can fail because failure to prioritize your expenses, or to budget practically for normal out-of-pocket expenses like groceries and gas, a failure to plan for the unexpected, or to include quarterly or annual expenses, and then the last is spending more money than you earn. Now back into our more common money mistakes. First one is late bill payments. Paying your bills late is one of the biggest mistakes that you can make. Now again, I mentioned, yes, sometimes people are forgetful. We are all human. But if that's not the way it is, then you're doing something wrong. The huge mistake is leaving it till the last minute. Or if it's past due, just letting it slide and waiting until the next month. Do you only make the minimum payment on your credit cards? Are they close to or over the limit? Because you need to realize that those fees can kill you in the long run. The interest rates on those credit cards can be crazy, and if you're only paying the minimum, how fast do you think your balances will go down? The next is missing payments. Missing a credit card payment or a loan payment might cost you penalties and again, interest. But the main problem is that it adversely affects your credit rating. This makes it more difficult and expensive to get credit in the future. Adverse credit payments can often be avoided by setting up direct debits or in speaking with your bank when difficulties arise. It is also possible to appeal against late payments, offering an excuse such as getting delayed in the mail, but in reality, not many people mail payments in nowadays. Another one is too much credit card debt. That's a sign that you're making some mistakes. If you have a hard time controlling your spending, you're going to want to leave your credit cards at home. Having high balances or maxing out the cards is a sign that your use of credit is out of control. Stop using the cards and create that budget or spending plan in order to get those balances paid off and get back in control. Remember, paying the minimum each month is not designed to get you out of debt faster. Every month you only pay the minimum and carry over a balance, the credit card company is charging you interest and making money off of you. When your debt load is high, make the highest payment that you can and not the least. This way you can get that balance down faster. Another common money mistake is that credit is practically used for everything nowadays, from getting a mortgage, a new car, renting an apartment, to getting employment, and so forth. So again, if you let your bills go past due, then that will directly affect your credit. It is wise to check your credit report and make sure that the information being reported is accurate. If you abuse your credit privileges, it can haunt you for many years. And this goes back to living beyond your means. And the last mistake that I'm going to talk about right now is not having any financial goals. What are you working towards? Do you want to buy a car, a house, or retire early? What are you doing to get to that goal? I had a friend who said that he wanted to retire by the time he was 30. Now he's 39. What happened? He had good intentions, but he wasn't working towards that goal. He changed employment regularly. There was no stability and no saving. When I asked him what happened, he says he's changed that age to 45. So we'll see when he gets to 45 if he actually gets to retire. So you want to try to save at least 15% of your income each year for retirement in a tax-advantaged account, such as an IRA or a 401k. If you can't get there right away, step up to it over time. Most people can find extra to save if they just pay attention to their spending. If you're lucky enough to have a 401k and get a matching contribution from your employer, contribute enough to at least capture the entire match. Otherwise, you're basically foregoing a part of your compensation. You wouldn't want to turn down part of your paycheck, so don't leave matching retirement account contributions on the table. Next thing I'm going to talk about are credit reports. To obtain a copy of your credit report, you would want to go to www.annualcreditreport.com. And by law, you're entitled to a free copy of your credit report from each of the credit reporting agencies once every 12 months. Now, when you pull your report, check it over very carefully. Why should you check your report? Well, to make sure that the information being reported is accurate, complete, and up to date. Information on that credit report affects whether you can get a loan, how much you will have to pay to borrow money, which is interest rates, and it can also affect when applying for employment or renting an apartment. It is also good to obtain a copy to check and repair possible identity theft. When you're dealing with certain credit problems, once you've pulled your credit report, there are some things that you can do to help you get out of those issues. First is credit counseling. There are reputable organizations that can advise you on managing your money and debts, help you develop a budget, and offer free educational materials and workshops. The next are debt management plans. Creditors may agree to lower interest rates or waive certain fees while you make regular, timely payments through a credit counseling organization. The next is debt settlement, where negotiating with creditors to allow you to pay a settlement to resolve your debt. But there's a potential for negative impact on your credit and other serious consequences. And the last is personal bankruptcy. This is where you eliminate or restructure debt, but again, consequences are long-lasting and far-reaching. Now I'm going to talk about how to deal with debt collectors. Do your best to communicate with debt collectors only in writing. Written communication works to your advantage because you have a record of everything that they say. There are no laws that require you to speak to debt collectors on the telephone. You can also stop them from calling entirely with what's known as a cease and desist letter. Now, it is always important to send your letters by certified mail with return receipt or by registered mail. You will then have proof of the dates that your letters were received by the debt collector. And remember, save copies of everything. Always remember that debt collectors cannot call you before 8 a.m. or after 9 p.m. local time, call you at work if an employer forbids personal phone calls, excessive phone calls to harass you. They cannot tell a person other than you or your spouse about your debts. They cannot threaten you by taking property, or intimidate you with criminal prosecution or imply that you have committed a criminal act. If they are doing these things, you want to report abuses to the State Attorney General and local Consumer Protection Agency and Federal Trade Commission. Okay, So now back into some of the more common money mistakes. Another big one is avoiding the issues. Many people have no idea how much they spend or how much debt they have. And as things get worse, it becomes less attractive to find out our true financial state. Unfortunately, ignoring your problem will never make it go away. Being aware of your circumstances is essential to moving forward. Now, the next is emotional shopping, and this is something that many people are guilty of, myself included. There have been times when I was upset and thought that by buying myself something that it would make me feel better, but that's just not the case. Yes, you feel better temporarily, but that money could have been used for something better. Now, you're probably saying that you should be able to buy yourself something nice from time to time, and yes, you're right, you should. But remember that 50-15-5 rule from earlier? Once you've put aside and paid your essentials, retirement fund, and savings, then yes, by all means, get something for yourself that you know you will use. But if you are robbing Peter to pay Paul, or taking the funds from somewhere else that is a priority just because you're upset, then that is wrong. Now, having no emergency backup plan is another money mistake. We've all heard that song, Just Got Paid. It's Friday night. You want to head out. So you jump in the car and off you go. But wait, something feels funny. Maybe the transmission is slipping. And there goes your Friday night. How much does it cost to change your transmission? Are you prepared for that if it happens? Unfortunate things have terrible timing. They don't happen when you have a little extra at the end of the month, which, if you did have, you should put into savings. They happen when you've just paid your rent or mortgage, and all of your bills, and your pockets are full of lint. Well, over half of Americans admit that they would be unable to handle an unexpected expense, such as a medical bill or car repair that was outside of their regular budget. Being unprepared for a financial emergency can cause additional problems, such as going into debt to fund an immediate expense. Try to set aside at least 3 to 6 months of living expenses in a savings account to tide you over during unanticipated tough times. And make sure you have all the insurance you need: health and disability insurance for unexpected medical issues, car insurance for accidents, homeowners or renters insurance to cover your home and belongings, and life insurance if you have dependents. And the last is believing that fixed income is the only answer. Fixed income is not the only source of income that you have to depend on. There is part-time work out there, or maybe you're really good at a particular skill or trade. Again, if that is the case, you can sell what you make or fix cars on the side, and with that secondary income, you can save for emergencies or put it towards retirement funding. Now, I spoke about ignoring the issues. You want to deal with what's going on. It's a very bad idea to avoid the issues when it comes to finances. Don't bury your head in the sand because you refuse to admit that something is true and that there is a problem. It will not go away on its own, but with time, effort, and discipline, it can be fixed. With that being said, now that you know what some of the most common mistakes are, you will have a better understanding of how to avoid them and how to deal with them. I'm going to touch on dealing with bills. First, I'm going to speak about dealing with medical bills. And according to creditcards.com, there are many ways to deal with medical bills. First, everything's negotiable. You may be able to get a portion of the bill reduced. A hospital bill typically includes items for surgery, anesthesiology, medications, x-rays, and other expenses. Contact information should be included on the bill. Try talking to the service providers to see if they will reduce their fees in any ways. If you don't ask, you'll never know their fees in any ways.